let's get to our next guest then. Manish Sonthalia, Chief Investment Officer at Emkay Investment Managers, is our market master on the show today. Great to be with you. Good to have you on the show as always, Manish. Very interesting times for the market. I mean, we keep hearing a narrative building that earnings will eventually improve, rate cuts are coming, local macros are looking very, very good. But the market's still nervous, kind of sitting at the edge around this zone of 24,500 to 25,000. What do you make of things now that Q4 earnings have wrapped up?
So, Surabhi, good morning. I think earnings has not disappointed at all. Both the large caps, mid caps, small caps, all have come in better than estimates. And broadly, around 3,000 odd companies reported something like 15% growth in PAT, which is much better than what was built into when we started the earnings season. So that's not too much of a problem. I think the problem is to do with the nature of the market these days. I mean, when you have a whole lot of negative news, the market tends to bottom. When you have a whole lot of positive news, the market tends to top out. So in the near term, I think it's just to do with this tariff thing, 9th of July. Till that point in time, I would believe that it's difficult to take out 25,000, 25,500 on the upside, just because every bit of positive news has got priced in. And at the margin, you have seen the primary issuances, the QIPs, the press issues, they have started to pick up again massively. That was one of the main reasons why the markets actually tanked. You had a whole lot of primary issues get bunched up last year. So that's somewhat of a negative issue as far as the direction of the market is concerned. But everything else is on the positive side. I think market will bide its own time and maybe look forward to after the second half, towards the second half of this year, when you have all the monsoon and you have the rate cards, all of that got priced into.
All right. Hi, Manish. Good morning. Good to see you. Well, the number of large trades just continue, and Nimish will be joining in shortly to tell us. There are a couple of more that hit the screen. Yes Bank, the reason that it's down is because the P is likely to be a seller in today's large trade. And I think Ola Electric as well, there's a large seller out there. So these large trades just continue. Manish, what are you making of this fresh supply? The equity mutual fund industry, the domestic industry, was sitting on an ample amount of cash. Looks like a large proportion of it is getting deployed because in the month of May itself, promoters, that's the biggest risk, one would like to say. Share prices move up, markets get a little, buoyant, and they come in there and they cash out. Some would say rightfully so. Do you think it's a concern, or do you think taking some money off the table is okay? Your view?
So that does take out liquidity from the secondary market. If you have a whole lot of bunching up of issues, and we had a hiatus in the first 3 months of this calendar year when the markets were soft, and just that markets have started to pick up, you have a whole lot of issuances come through, and that do tend to take out liquidity from the secondary markets. And that's a big risk for the markets per se. And going by the number of issues that you still have for the whole of this financial year, I mean, it just remains a very big overhang. We just got to remember what happened in the last financial year. And if you don't have any solution to this, then obviously you'll have a problem in the secondary market.
While we wait for Nimesh to join us, because there are some, 4 or 5 blocks, he's been tracking each and every one of them, and the Yes and the Ola blocks have happened. While we wait for Nimesh to join in, on the lenders, Manish, we're at an interesting juncture. Yes is going through a metamorphosis, right, with the Japanese perhaps checking in. And then there is IndusInd Bank. The stock is halved. Everyone's waiting for a management transition. But every now and then you have these new shockers that keep coming in, that there was fraud, that this was not just a simple error. How are you looking at these two, lenders, mid-sized lenders, and IndusInd is, of course, a larger one, and the transition that they're going through? Manish?
Yeah, so of course, stock-specific actions will remain in the entire lending space, and both of these names which you alluded to are interesting names. Both of them look very good on a valuation front, and I think the Yes Bank issue seems to be lesser of a problem and can be a very big game changer now that you have a change in the management. IndusInd Bank, management issues need to be figured out, and then only valuations are absolutely fine. But we got to just figure out whether the entire thing has got cleaned up, and what is the new leadership going to do. after they take over. So that's how I would look at it. But on an overall basis, not so too positive as far as the fourth quarter earnings season was concerned for the banks. High single digit sort of numbers that came through. Valuations are perfectly fine, and now you will have a rate cut. So even there, you don't have too much of a margin expansion scope. You will be hurt on the margin side because everything will be a pass through this time around.
All right. But you'll be positive on prospects of both these two banks, right? IndusInd and Yes Bank.
Yeah, they need to be kept on the radar.
Got it.
Get figured out into our universe, and we'll figure it out whether they are worthwhile buying. But both of them look interesting.
All right, look interesting. Not stocks for the faint-hearted, but as you're saying, you believe there's good reason to find it interesting. But Manish, I wanted to ask you about the other one that's not for the faint-hearted. Vodafone Idea, it seems time is running out for them. And any kind of hope, on a day-to-day basis, the news flow is not really supporting it. The analyst community, some part of it believes that we'll have a three-player market. What is your take? What's the way out for them?
Oh, the latest news about AGR dues not getting a waiver from the government. How will they get the funds? That's the main issue. Because the Supreme Court has denied them that exemption. You now also have the government not relenting. So, in spite of the fact that we should be having a three-player market, what is the financial viability of this company? That remains a big, big question mark. Unless and until you have somebody take over this sort of an entity with the liabilities that would come through. As a going concern, I don't know how they are going to survive. Just unable to figure out.
So you'll just stay away from that one?
Absolutely.
Okay, all right. Stay away from Vodafone Idea. Got that.
But just a quick word. Otherwise, Manish, Bharti, do you like the telecom space otherwise? Is that something that you have a favorable view on?
Yeah. So, Bharti is one of the names that we have in our portfolio, and Reliance is there in our portfolio. So, I think both of them would be a play on the ARPU increase that's likely to happen over the coming years. Valuations are not very prohibitively expensive. Satellite telephony is around the corner, and all of these guys, both Bharti, Reliance, have a play in the satellite telephony as well. Okay. So I think it's a play on the ARPU game, and it looks interesting, both of them. Okay,
so otherwise you like the space and you like the leaders there, but cautious on obviously VI. Got that. Manish, it's incredible, right? You imagine the kind of liquidity that the market is able to provide to give exits, all kind of exits, to PEs, to promoters, etc. Remarkable, really, how far we've come. On Ola, slightly broader question. The trajectory of this particular company in the market has just completely gone haywire, right? Just your thoughts on the EV space, if there's any other way you'll play it. And I'm broadening it even further. I think 5th of June is World Environment Day. So if you talk about a sustainable play, whether it's EV, renewables, solar, etc., give us one or two stocks which look good.
So, with bated breath, I'd be watching out for the launch of RE electric vehicle, which is Royal Enfield's electric vehicle. They're calling it the Flying Flea. And it can be a game changer, or it could be a very bad move by the company, because you won't have the thump, for which Eicher Motors is known for, and has really is now clocking close to 1 million bikes every year. And that needs to be watched out very, very carefully. So, that is one name in the EV space. It can be a game changer. I'm watching that with bated breath. We have this stock in our portfolio, very decently valued, very decent numbers, cash flows, etc. So, this is one name. Except for that, in the electric vehicle space, you have a whole lot of valuation issues, volume issues, even the, the solar and the wind, and the valuations are just out of whack. So, would stay away from the narrative around EV to a very large extent, but just that one name that we have in our portfolio. And, that can be a big move.
All right. In the past, I recall your bullishness on Royal Enfield. The Flying Flea is going to be launched, I believe, in the first quarter of next calendar year. I've started my recurring deposit. Maybe, in fact, if it's good enough, we'll take up on, because every 6-7 years, normally I like to pick up a new motorbike. So I'll have that.
It's going to happen after increment season. So, makes it easy.
I'll just say that I'm keeping some money ready. Very quickly, Manish, before we let you go, I always make note of our guests who talk about stocks. And the last time around, I think you spoke about Star Health. And the stock did very, very well from there. And I think it's up 20-25% from the time we last spoke. Continue to remain positive on this name. And if you want, you're feeling, generous
Absolutely.
enough, give us another name.
No, I think, not too many changes after the earnings season this far. But, continuing on Star, I think when you have all the negatives priced in and things are likely to get better at the margin, of course, there will be naysayers who will be saying, no, the loss ratio is not going to be between 65% or thereabouts. It's going to continue at 80% or 79%. Then you create an opportunity, and valuation that 20 or less than 20 prices to earning multiples and a huge runaway for growth in the health insurance space. I mean, looks like a sitter for me. So no new name just yet, and Star Health remains a good bet for me.
Okay, Manish, what a nice, lovely conversation. It's always great talking to you. And this time, I think we managed to get very, very specific on lots of theme sectors as well. So thank you very much. And of course, the disclosures, the usual disclosures apply for all the stocks discussed. Thanks for joining in. You have a great day.